Have you been thinking about purchasing and financing a home?
Well, Alan, today we're going to talk about the two major common loans that a lot of people use, that is FHA and conventional. We'll talk about the benefits and the difference, so if you're thinking about getting a loan, that you can make the right choice for you.
Stay tuned.
Hello everybody, this is Gamalier, broker realtor with Sturgis Realty Group.
And I'm Alan Rios. I'm the realtor with Sturgis Realty Group here in Metro Atlanta.
Today we have a great topic for you. We're going to discuss the two major loans that people use nowadays, and that is the conventional loan versus FHA loan.
Yeah, they're the two most common ones, as Gamalier mentioned. So we're going to provide you some nuggets, some tidbits between the two so you can decide which one is actually better for you.
Well, let's start with the main benefit of one of the conventional benefits, and that is definitely has to be the down payment, which is only 3% down when you're buying a home. For example, if you're buying a home that it was $300,000, then you have to put down $9,000 versus other program where you have to put 20% and you have to put $60,000. So $9,000 versus not $60,000, it's a big difference.
Yeah, and a down payment as far as an FHA loan, it's only about 0.5% higher, but the minimum is 3.5%. So if you're purchasing a $200,000 home, you're looking at a $7,000 down payment there.
Yeah, another major common question people ask, what credit score do I need to have? Well, for conventional, you need to have a minimum of 620 credit score, but sometimes vary through the bank. Some bank may require a little higher score. Mostly I see it varies between 620 to 680 score.
And a credit score for an FHA loan, generally right around 580 or so, right? So you want to make sure your credit score is up there a little bit. However, if your credit score is below 580, some lenders may actually approve you. However, you would have to pay a little bit more of a down payment, as much as 10%.
Yes. Another factor, obviously, that a lot of loan officers use, you need to understand, is the debt to income ratio, what they call DTI. For this sample, for the conventional loan, it's 43%. So for example, if you make $2,000 and you take that, multiply by the 43%, which is 0.43, equals roughly around $860. So which that means that's the maximum payment that you could have. And keep in mind, when I say payment, that includes taxes, insurance, and principal and interest, the bank payment, okay? And also PMI in some cases.
And as far as the DTI, when it comes to an FHA loan, the debt to income ratio, maximum can be 50% here, right? So if you look to purchase a home, you make sure that with an income, say, of $2,000 a month, you cannot have a mortgage that will be higher than $1,000 a month. So as Gamalier mentioned, we're talking about the principal, interest, and taxes and insurance wrapped up into that, to take that into consideration. So that's one big factor there. You do have a little bit of a room there as far as your debt to income ratio is concerned.
Another factor also important to keep in mind when you're using a conventional loan, they're a little more lenient when it comes to appraisal. Like for some appraisal compared to other loans, they may require you to do more repairs. With conventional, they're a little lenient, so it makes the transaction a little bit easier also.
When it comes to using appraisal for an FHA loan, their guidelines may be just a little bit different. Sometimes they're a little bit stricter in the sense that you may be required to do some repairs in order to proceed through the process. So that is something to consider there. Not all the time, but there are situations where that will be allowed.
Yeah, another thing about conventional loan that is good to know is that you could usually use it for your primary home where you live, but you can also use it for your second home, or you could use it for investment property, one of my favorite.
Yeah, and then with an FHA loan, you can only use it for your primary property, the house that you're going to be living in. So that's the big difference there between FHA and conventional. And that's something you would have to take into consideration, you know, depending on your situation going into the process of purchasing a loan.
Yes, definitely, Alan. And another one, obviously, that you need to understand is PMI. When you have PMI or not. For conventional, if you put 20% down, then you could eliminate the PMI. But if you put less than 20%, you decide to put in 3%, then you're going to have that additional payment, which is at 3% for PMI.
Versus an FHA loan, you're going to be paying PMI for the entire length of your loan, right? So private mortgage insurance is stuck with you unless you refinance, but there's an additional premium that you also have to pay, and that's the FHA mortgage insurance premium, which is right around 1.75% of the purchase price of your home. You have an option of either wrapping that into your loan or paying it separately and paying it at the closing table once you finalize everything.
Definitely, Alan. Another factor also important to know is the loan limit. How much can I borrow if I'm using a conventional loan? Well, the loan limit for conventional is roughly $647,200, which means that if you borrow more than $647,200, then you have to use a different loan, which would be considered jumbo loan, which is typically higher fees and highest interest rate also. And
on the FHA loan side, you have a loan limit range. So it goes anywhere from $420,680 versus $970,800. Now this is all dependent on your location, so it's by county. So for instance, here in Georgia, Fulton County, I probably be paying higher versus say Cobb or Paulding or Bartow counties there. So that's something to consider with an FHA loan. Very important, yes, to consider. Another thing in general, when we talk about conventional payment, is lower because it's less fees and there's all the additional fees and all the different loans. So in general, conventional program is one of the best programs you could get if you could qualify for this particular program. Versus an FHA loan, the payments are generally higher, as we discussed here. One of the factors, as I mentioned, PMI for the entire life of your loan, and also the FHA mortgage insurance premium. That's something to take into consideration. Just the fees that are involved with an FHA loan will end up, generally speaking, a little bit higher versus a conventional loan. But remember this, if you're looking to get into a house and you're on your way up, improving your credit score, this is an option for you to get into a house. So that's something to consider there. The government's helping you out. They're backing this loan to get you into your home. Definitely, they're both really good programs, obviously. So the important is for you to understand it and make sure you pick the program that makes more sense for your situation. All right, hopefully this video was informative. We discussed the difference between a conventional loan versus using an FHA loan. If you have any questions or comments, please leave them below. Remember to subscribe to our YouTube channel. We want you to be part of our YouTube family. Please share our videos with your family and friends. We'd love to see you do that. And remember to click like and subscribe to our channel. I hope this video has been helpful for you. And thanks again. Thank you for watching the video. Bye-bye. All right, take care.